All right. Hello, everyone. Welcome to today's weekly market check-in with myself, Greta Wall. I'm joined by David Prince, the leader of T3 Live's Inner Circle virtual trading floor. David, this market is insane. We have a lot to talk about with this week, the swings we've been seeing, the swings from yesterday to today. So how's your Thursday going for you so far?
Today's a little annoying, but it's
Mm-hmm.
fine because Monday and Wednesday were stupendous. So today's a fork in the road. It's a little annoying, but it's fine.
All right. A little annoying, but fine. The title of our stream today is Wild Markets, and I'd say that is quite a way to describe the market that we've been in. It feels like this has been months of trading this insanity, and it's only been just over a week since we got the tariff announcement and the absolute meltdown that we've seen on Wall Street and all of that since then. So let's start with Monday, because the Inner Circle did really well Monday when a lot of people didn't do really well in this market. You have been up late trading futures and all of that all throughout the week. I know you've done a ton of extra prep work to put you and yourself and the Inner Circle rather in a good spot. So when it came to Sunday night into Monday morning, talk about the prep you did and how you were approaching the environment that made it different for you guys than a lot of other people in the market on Monday.
I was willing to miss upside. What I mean by that is Thursday and Friday, as things were ugly, we actively traded, but as terms of swinging stocks, we kept it to 20, 30% of, let me turn down the chat, of, how much capital we were really putting out there, with the anticipation that rarely you bottom on a Friday and that you got a loudmouth like Kramer all day, all night, and every moment in between screaming about Black Monday and how he sees similarities and there are going to be some halts and on and on and on. So it was almost like he was making it happen. Anyhow, what we did is say, listen, let's plan for the worst, but for us, it could be the best, right? Ugly Thursday, Friday, you get a crescendo type of like insane move on Monday. If you're going to be in cash, as we've been pretty bearish all year, if it's time to put some money to work, it's going to be that Monday on a bad open. So we really planned for it, and we took our shots. But what I did is I looked at, okay, what are the best in breed stocks I want to own? Here are the levels. How can I be the most efficient I can be with the capital on hand? And more so for the fun, not for the fun for me, but for everyone else. So I don't want everyone buying Amazon and Apple and Nvidia and the stocks, but how can we take $2 and maybe add 2 to it and get 6, not 4? So it was a matter of looking at the best ideas and then maybe a couple ultras on them, which instead of buying, say, an Amazon, we bought AMZU, which is an ultra on it. And that is how we did our planning. And I kind of just went case by case. This is my number 1, 2, and 3 are top 3 stocks to buy. This is my favorite index to buy. This is where I want to size up at this level. And that was what I did all weekend and all Friday. And, I'd love to say it was lucky and be modest, but, I've done it before and we've done it before. It felt like a really well planned out trade that paid off. And that's how we went about
it. You only get the good luck on trades with the right preparation. It's never luck.
I've had lucky trades.
Luck.
This one, I was like, there was no luck here. This was having the capital on hand to put to work on Monday, so you weren't like sitting there frozen. And it was having your level. So instead of saying, oh my God, because it get worse, saying, I'm excited about this level, press the button and buy.
Totally. All right. When it comes to yesterday, I would say probably a lot of people got caught on the wrong side of the market yesterday. It looked to probably a lot of people like a shortable market in the morning and throughout the session until we got the huge turnaround. But you over and over yesterday told the Inner Circle, this is not a day to short, not a day to short. I'm looking for cute short trades here and there, whatever, but it's not a day to get, short across the board. And you guys were long. And you were set up nicely for that news. Obviously, you can't predict the news that came out from Trump and the tariff delay. But what was it about the market that told you do not short here and be ultimately long?
I think it's always the same thing. It's where your odds best served, right? And where can you take the most advantage? So it was like, hey, I don't know if Trump comes out with anything positive. I don't know if he gives in this week or next week, but the rubber band, I'm tired, is stretched so far that if there is the hint, the slightest hint of anything positive, we can just explode higher. I never thought it was going to be to that degree. I'd be lying. I always was confident that the Qs would bounce pretty hard to 445, 450, not 467. That was insanity. And then I just went underneath the hood and said, where can I get the most bang for my buck? And the one I was proud of is said the Sox, which I grew up watching guys like Dan Niles and Whittington and really following, KLA and Broadcom since, for 25 years. So I was looking at the space. I've been bearish it a while, and I said, it's time. And how can we take the most advantage? And I said, it sucks out. This ultra can be up 50% in a couple of days. It's that deeply oversold, the space, the Sox. So I just said, we got to be positioned for it. I don't know if it happens today, next week, or 2 weeks from now, but this is where you size up. So in the sevens, I'm going to say we bought the float, not literally, but and then NVIDIA, when I saw it at 86 on Monday, hell, I bought it. And then Tuesday night, I saw it after hitting 100 back off into 893. I bought more again. And we just went after our favorites. I told you about Amazon. I told you, and rather than just cut some people out because the Qs are large, they don't work for everyone. I just focused on TQQ at the 36 to 37 area, and really held a decent amount for that insane move yesterday. So that's what we did. That's where we focused. And I kept telling people, you don't need to buy everything. You need to buy enough of some very special ideas because they're all going to trade in a vacuum together. So we bought a lot, proud to say it, probably a record week in the 4 years that Inner Circle's been around. It was Monday and yesterday. Monday would have been enough. So
yeah, you've been navigating this environment that's been very hard for a lot of traders very, very well. Before we talk about today's turnaround, I want to get your, I was just listening to the room when the Trump announcement came out yesterday and your response to his negotiating tactics and how this worked out. So can you just share a little bit of that with the public here?
Sure. But I want to say I continue to believe we're in a bear market yesterday and told everyone that. But I said it was a masterful plan. I said, this is unbelievable. I said, this is art of the deal. This is he literally sucked everyone in. He even told us on Twitter or Truth Social to go out and buy stocks in his own way. And then sure enough, he came out with that announcement. And it was a total masterful plan. The issue that we see today is that's he took out all the bullets yesterday, right? That was a pretty powerful thing he did. But if it doesn't work, if there's dislocation like we see in the bond market that's starting today, if we see stocks give 2/3 of that gain back or more, then there's an issue because there's only so many bullets he has. And of course, China's the real issue, right? Do the United States and China get anywhere with their trade war? That really many people say this is all about us and China. So I thought it was a masterful plan for the moment, right? And to gain some confidence in the markets here and around the world and get some people on his side. But out of fairness, that was a moment. What I did say is, and I mean, it's funny. The size of the move yesterday assured me, like people said, so how do you respond? And, what do you think happens from here? And I said, the only thing today I really know is it told me we're definitely in a bear market, which was counterintuitive for some. But for me, I was like, there's no such thing as a move like this in a bull market. I'm not, 90 years old, but I've been around for almost 30 years. You don't move 10, 12% in an index in a bull market. Never. Just doesn't happen. So I said, if anything, this tells me we're in a dangerous market and we got to sell most of our stocks because only in bear markets do we see this. And moreover, every time it's happened, we saw new lows in the not too distant future, like a week or two down the road. So masterful plan, but he really did take out all the stops, literally and figuratively. So now it's like where does he go from here? It's really important the markets hold up, or he gets somewhere with China, because I don't know what else he has behind him. So Trump did something special. The markets responded, but he better hope they don't give it all back, because I don't know what he would do next. So
I mean,
my thoughts.
you've said over and over again, the most vicious rallies happen in a bear market, and talk about a vicious rally yesterday in a bear market, and then a vicious turnaround today. We're off of some of the lows down.
We've
The
had a
Dow's down.
really powerful bounce.
Yeah, so that's good. But talk about the action today and what's happened, and just how you've been navigating it and playing it today. It's
So
been
my game
quite a
plan
wild
this
day.
morning was, hey, if we pull back, a lot of people are on the wrong side of yesterday, short. And there are a group of people that couldn't fathom buying higher, because it's been dangerous to buy higher. So I do think any dip will get bought. So the first thing we did was focus on Q. Soxel was a home run for me. So I just thought, okay, if it pulls back enough, I'll throw some on. So those were my two focus ideas. But I said to everyone today, I said, there's nothing to do today that I have any sort of gut feel on, that I'm excited about. I said, if we pull back some, we'll throw some trades on. So the Qs pulled back. I threw on some TQQ. I think I made at best $1, maybe 80 cents. We would sell some. Went down another $2, bought some, bounced 70 cents. And I thought, wow, maybe we should find a bottom. I don't know, 448 in the Qs. And as they kept going down, I said, oh, wait a second. We shouldn't be giving back at max a third of yesterday's rally. We start to give back a half, it's unhealthy. And at one point, every index and most stocks had given back more than half of what they captured yesterday, which to me, in simple terms, is you give back more than half a rally a day later, it's very unhealthy. As a joke, I once named it my North Korean battle star. I always forget what I nicknamed it as. North Korean.
I think it was your North Korean Death Star.
Okay, North Korean Death Star. Yeah. That's a North Korean Death Star. Fun name for levity. But the point is, you never should look like that. If you start to have an upside down, that's just miserable. And that's what we had before we just had this cute bounce. We have given up much too much of the rally. The bond market looks very unhealthy today. So there's nothing going on today that people should say, oh, it's a natural pullback. I expected a natural pullback today, of course. I mean, that was unheard of yesterday. But this pullback is more than I think people expected, and should give warning that we are in a bear market. I mean, and by the way, I don't really care. Bear market, bull market, it's all jargon, right? Definition, 20%. I just simply think that the easiest path for stocks right now are down. That's what a bear market means to me. And rallies are meant to be sold, right? Or shorted. And if it gets really ugly, you buy the dip. Whether we're technically in one or not, it's almost not important, but it feels like it is. We're going into earnings season. Last earnings season was the worst quarter I've seen in 2 years. Mag 7 was not impressive. And the banks start Friday. And Jamie Dimon is not the most upbeat fellow, even in the best of bull markets. So I'm not expecting him to be super positive tomorrow, but we usually buy his negativity. So maybe it'll offer a buy opportunity. But with the bond market still not acting healthy, with us giving back at one point today more than half of yesterday's rally, I think people should be on notice to be careful here. Buying tips is fine. That's what we do. But I'm not uber bullish, and I wasn't before this pullback. At the end of yesterday, I said, guys, sell almost everything. And, wisdom I got for you is real simple. I think there's more downside and upside going forward. And I continue to think that.
You mentioned the bond market, and I did want to get your take because over the past few sessions, something has felt really broken about the market, and especially how the bond market was reacting. Of course, you meltdown in stocks, you expect people to pour into yields or pour into treasuries, and that definitely was not happening.
No. Huh? It's not a safe haven.
It didn't feel like a safe haven, right? No. It's definitely a different. People don't trust the U.S. government, I think, at this point.
That's what it comes down to, right? So if we are the world power that everyone trusts, then our bond market will inevitably be where people go. For the first time in God knows when, we're seeing the bond market show us signs that maybe we're not who we claim to be or what we want to view ourselves as. And we all know our massive debt load. So I think people are really concerned. Wait, if there's a slowdown And I get it. They know about tariffs and inflation, but still, there's a slowdown. Stocks are going down like this, and people are not buying bonds. Then there's like, what happens if people really full out lose faith in our debt system and just start massively selling? This is the beginning of something maybe bigger. And obviously, the bond market is enormous, right? So stocks are taking a cue, and if it doesn't get healthier, I think it'll be a tough situation for the stock market, just in view of people not trusting the U.S. financial system. I don't want to be over dramatic. We're not there yet, but that's the road we can get to. People want to know, oh, we have the most powerful, deep bond market in the world, and people come here because they trust us the most. The minute we lose that, there's an issue. I'm not saying
the auction yesterday was a little bit of reassurance. Things were a little better, but it felt really, watching it myself, I was like, this just feels broken.
It was surreal.
It doesn't feel right. This doesn't.
Someone said it best. They said it's like the U.S. market is one big meme stock. Said it feels like everything's a meme stock today, and they were right.
Yeah.
I mean,
true.
I bought Soxel at $7.50 or $6 pre-market yesterday. It went to $12.50. I sold all by 11. I'm not very smart, but I mean, it went to 12. Then I bought Hood pre-market, and it's just the moves were unfathomable. 32.50. It went to 41. And Nvidia the night before at 93, and it was what, 110, 115?
Yeah.
So I've never seen. I mean, it felt like I was trading internet stocks in 99. It was just wild.
Yeah. All right. On top of all of the tariff news and the delay and all of the things, we got a CPI report this morning. Inflation is still a thing, lighter than expected. So the bond market was happy
Just
about
meaningless, though. In the grand scheme of things, really
right.
meaningless.
Does it even mean anything?
Everyone
Does anyone care anymore?
What do tariffs mean to the inflation picture? So what the hell do we care about yesterday's inflation when it's all about tariffs and how they affect pricing to moving forward? So to me, it's a non-event.
The Fed, I feel like now, is kind of in this between a rock and a hard place spot.
Yeah. They made that term
about inflation.
Where the Fed is right now. I mean, that term was created for their situation.
They care about inflation and the job market, but of course they can't predict anything that's going to happen from the tariffs, and they can't cut too early because of the tariffs, and but they also can't let the labor market fall apart. So it's hard. Is it worse for the Fed right now if inflation continues to go down, because then they need to start cutting if inflation continues to go down?
No, I think to them it's going to be, they have to see some. I mean, do they have to start cutting? They have to start cutting if the jobs market disappears. That's where they're going to have to start. And I think that might be part of the issue, that they're not going to be in a rush, even though we want them to be, and even though Trump screams at him all day to be, that we have to start to see a real slowdown in jobs growth in the corporate world in the United States. And by the way, I wouldn't be shocked if we do start to see it, because I hear stories from mom and pop world where people are like, how do people respond to what just happened, right? All of a sudden you have to pay more for parts, and your business used to rely so much on China, and immediately your business has an issue. What do? You fire people, right? Like, that's the first thing you do. You got to lower payroll. You got to lower your outlay. So I wouldn't be shocked if you start to see that. But the problem is, I don't know if they're ready to move till they see it in a number. And at the same time, of course, if they go too soon and then it turns out pricing gets out of whack, which inevitably tariffs will make everything more expensive, then we'll have the question of, oh, wait a second, did I jump too soon? Because look, there's inflation. Oh, wait, it's transitory. Oh, wait, the last time I used the word transitory, I looked like an idiot. So they're in a really tough jam. Yeah.
Our next decision's what, May 9th? I think it's the meeting.
I think so.
We got some time. Maybe we'll know some more. Okay. As you mentioned, earnings season starts tomorrow. I mean, this week, wow. Tariff delay, CPI, earnings, big week. Earnings season officially starts tomorrow with the big banks. Who is it? JPM, Morgan Stanley, Citi in the morning?
I think Citi's next week. Wells Fargo, maybe it's Citi's tomorrow. I know it's
tomorrow.
JPM,
Wells Fargo, Morgan Stanley,
and BlackRock.
JPM, Wells Fargo, Morgan Stanley, BlackRock tomorrow. Citi sometimes comes on that first day, sometimes they don't.
I
Um,
actually think outside of deal flow, which is still light,
mhm.
banking, I think we'll get some decent earnings reports, but I think it's all the guidance, right?
That's my thing. Now that we have the tariff news and all of that, do you expect so many companies, like they did during COVID, to pull
Less
guidance
so
and
than
say,
I
"We
did
just can't"?
yesterday, right? Because Trump
Uh-huh.
changed things a little bit, but
Right.
on the average, one has to assume most people are going to be very nebulous as to as to how much concrete guidance they can give. It's
Okay.
going to be less is more in terms of, you know, the type of guidance they give.
Yeah. All right. And so guidance is so important, of course, to investors when it comes to an earnings report, if they want to, buy or not. Do you expect this to be, on the whole, more of a down earnings season, or just kind of a muted reaction earnings season because we aren't going
In
to
terms
get
of stock prices, it'll really be where they are pre the print. If we're back at
right?
low, it will be a low bar, right? A low hurdle. And we can
Mhm.
easily see some of these stocks do well. If we're having stocks fly the way they are yesterday into this earnings season, I'm not looking for a blockbuster earnings season for a lot of tech. I'm truly not. The comps are horrific, 2025 versus 2024. The law of large numbers comes in on a lot of these companies, whether it be AWS for Amazon or whether it be NVIDIA, just more normalized growth, better than 99% of the companies out there, but of course not 100% a year. Then, okay, so everyone's still going, all the hyperscalers are going to still spend just as much as anticipated, but can they still produce the same cash flow with that type of spend? Or are we going to see lower margins? And sure, okay, AI is still solid and the spending's still there, but these companies are planning for 3 years out, and right now they're earning less money. So I'm a little nervous about this earnings season in terms of, where I'll go. There'll be winners and there'll be losers, but on the whole, I don't expect a blockbuster rah 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 earnings season. Definitely not. It's going to be have the stocks priced in enough, and plenty will work because ahead of earnings they'll be down that they can almost, as long as they don't say anything tragic, they'll go higher. That's the type of earnings season we're in.
Hmm. All right. A pretty good question, an interesting question from Twitter. What is David doing right now on his long term accounts? Are you fully invested in 401k IRA? I don't know how you invest,
I
what
choose
type of
stuff
accounts
like
you
that
use,
for the
but
long term stocks like Immunome. That doesn't change that much. Occasionally, I'll find it like a Kava, and I'll go crazy for the long term.
mhm.
But I'm pretty adept with short term, so I don't focus that much on long term because I'm kind of good at the short term stuff. Meaning the next 6 months to a year. So to me, it's the same thing.
All right. All right, David, I know it's hard to come up with idea flow in this market because every single hour it feels like we could have a completely different market in an hour. Like, we could turn around completely. But what are some of the levels you're monitoring for, if you want to be long or you want to be short?
I'm a big believer in NVIDIA. I've been very bearish from 120 where I sold it all the way down. I said, I don't think we're bottoming until it's well under 100. Honestly, I thought it'd
Right?
be 90, 91. So we went to 86. I truly believe that they're so far ahead and they trade at a really decent multiple at this point that if you see it back under 100, you can buy. And I will certainly be aggressive if we ever back up into 90. So that's one name to me you can go back to and really be comfortable. Uh, in terms of other names, I want to mention if you're an investor, not a trader, because there's absolutely no sign to buy it. But I start to look at biotech and the underperformance we've seen, and I simply, as a betting man, right, look at the world where we are, how many companies in XBI are trading below cash, how there's still amazing innovation going on, how without them, we wouldn't have gotten as far as we have with cancer and COVID, and think, how do you not invest in XBI down here if you can look out 6 to 12 months? Amazon, this is good and bad. Amazon is trading not kind of cheap, by far and away the cheapest it's ever been. But that's also a sign that maybe a company has matured, like we know it has with AWS. That said, I don't feel like you can go wrong buying Amazon like we did at that 172 to 168 area, and if it ever got lower too. Those are three XBI's an investment. Immunome. I mean, the CEO just bought 100,000 shares at 13.75 and 7.75. So yeah, at $6, I'm a big fan there. So there are some names I'm definitely a big fan of. I finally want to say CrowdStrike, especially as we're going back and forth with tariffs, strikes me as if you think anything's changed when it comes to phishing and internet security, it's only going to get worse. And to me, that's best in breed. And if you can buy it at 300 or under, it's a no-brainer in my book. I bought a lot of size on Monday. I was kind of set up for that. So I went Stoxel, NVIDIA, Amazon, Qs, and I just didn't want to stretch too much because I wanted to execute. But if there was one name I was pissed off I did not buy, that would be CrowdStrike, especially as a short-term hold and a long-term holding. So
and they came out and said, like, what was it, Monday or Tuesday? They released that statement saying, we're not subject to tariffs. We don't have. So we're software. We're not making hardware.
You better buy me. And software, by the way, is insulated compared to what we see in the semiconductor space and so many other companies.
Yeah. The way you've been trading the past week plus, like you mentioned, you're really focused on specific names. Each day I watch you trade, and you're maybe back and forth on 4 different tickers. You're not spreading things out. It's always TQQQ or the Qs. Always, it's been a lot of Stoxel, and then you'll mix in NVIDIA or Meta or Amazon, depending on the day and the order flow you're seeing. How has that been for your trading to just really focus down on those names and not get yourself distracted with a bunch of extra stuff?
There's no way to be modest. It's been un-effing believable. It's been a year like I thank God. Monday, insane. Yesterday, insane. And I'm thankful. It's been unbelievable because it's so fast and it's so volatile that if you have 20 names to manage, it's like going to the bar and seeing 10 pretty girls and going home alone because you can't choose who to be with. So I simply say, okay, they're going to trade together. Might as well buy enough of NVIDIA and Amazon. And if I miss Apple or the next one, that's fine. So yeah, it's been amazing. And I'm sure it won't always be like this. So I'm just happy. Recently, it's been special. I love long-term bull markets where we slowly scale up. But for whatever reason, however God built me, I tend to do my best during volatility. I know when to step in. I understand it. I respect it. So volatility has been good to me for 30 years, and that's where I tend to spread my wings, so to speak.
All right. Well, I'm going to let you get back to trading because as we all know here, David is a real trader and has a large group of traders he is helping on a daily basis. If you want to get David's free newsletter, you can go to t3live.com/DP. It's a new newsletter that we started, sent out on Tuesday mornings, and you get a transcript of David's morning call and all of the levels and such that he is monitoring. So again, that's t3live.com/DP to get that free newsletter delivered on Tuesdays. David, good luck for the rest of today.
Have a great day.
Little bounce and rest of your week.
Thanks for joining all.